The energy transition will require more LNG, more battery metals, and a lot less carbon. But these markets lack reliable price signals and effective hedging tools to manage risk. Physical benchmarks are desperately needed. Our solution? Abaxx Commodity Futures Exchange and Clearinghouse, a fully regulated global market for new commodity benchmarks. Launching new physically deliverable futures contracts. And using smarter technology for better price discovery and risk management. Better hedging instruments, real pricing, smarter markets. Abaxx Exchange, launching soon.
Hello, everyone, and welcome to Abaxx. I'm Dave Greeley, Chief Economist at Abaxx Technologies. I'm joined by many of my colleagues today from the leadership team at Abaxx Exchange and Clearinghouse in Singapore, including Dan McElduff, President, Joe Rea, our Chief Commercial Officer, Sean-Mei Lim, our Senior Vice President, as well as Alistair Weir, Director of Environmental Markets, Sasha Lifshitz, Director of Metals Markets, Luke Spieleveld, Director of the LNG Markets, and Steve Lowe and David Gornall, Directors of Precious Metals Markets. We're also joined by Josh Crum, Founder and CEO of Abaxx. And together today, we're going to introduce you to Abaxx in our initial slate of physically deliverable benchmark futures contracts in LNG, carbon, and nickel sulfate, and we'll inform you of the steps that you'll need to take to trade these markets beginning next Friday on June 28th. And we'll answer any of your questions, which you can submit using the Q&A feature on the controls toolbar on your Zoom screen at any time. So let's get started. At Abaxx, our mission is to build smarter markets, markets empowered by better financial technology and market infrastructure to address our biggest challenges, including the energy transition. And to that end, we've built Abaxx Exchange and Clearinghouse, a Singapore-based but global commodity futures exchange and clearinghouse, recognized and regulated by the Monetary Authority of Singapore as an RMO and ACH. And now Abaxx Exchange and Clearinghouse is ready to introduce centrally cleared, physically deliverable commodity futures and derivatives to provide you with better price discovery and risk management tools. Our focus is on the commercial needs of the marketplace. Each futures contract we will discuss today is the result of years of consultation and working group efforts with commercial market participants, including some of those on the call with us today. And we expect that these futures contracts and our product slate will continue to evolve over time as the needs of the markets evolve. And we believe that the commercial needs of the marketplace are best served by physically deliverable benchmark futures contracts. Yes, we will introduce cash-settled contracts to allow for the trading of basis differentials and spreads, but we're focused on creating the new Henry Hubs and TTFs, the WTIs and Brents of the globalized natural gas market, and energy transition commodities for the next decade and beyond. To do this, we've built a team of experienced industry veterans, many of whom are on the call today, drawn from leading global exchanges, including the NYMEX and CME and SGX, as well as the commodity trading desks of the leading investment banks and natural resource companies, including Goldman Sachs and BP. This team is backed by a group of strategic advisors who are each deeply experienced market practitioners who have spent careers trading and running trading desks, who advise us on the development of new futures contracts and markets. These advisors bring us their experience from companies like Poten & Partners, JP Morgan, Glencore, and more. But let's get right into the specifics, and for that, I'll hand it over to Dan, Alistair, and Sasha to discuss our initial slate of physically deliverable benchmark futures contracts in LNG, carbon, and nickel sulfate, after which Joe and Sean-Mei will discuss the next steps that you'll need to take to trade these markets beginning on June 28th. After that, we'll be back to answer any of your questions, so please feel free to put them in using the Q&A function on your toolbar. And with that, I'll turn it over to you, Dan.
Thank you, David. So here on this slide, we summarize the tools we're delivering to you when we launch the enterprise next week on the 28th. Our approach to futures and options is something that any industry veteran will be accustomed to. We've aligned with and integrated the top clearing service bureaus, FIS and ION, as well as the front-end ISVs, including CQG and TT. So integration can be essentially seamless for many companies. On the clearing side, we employ two-way API capabilities, and so straight-through processes can be achieved in post-trade activities. We've integrated the CLOB, the central limit order book, and trade entry workflows into front end so parties can get a common stream of market data through APIs and drop copy services. We saw these features as essential to the task of recruiting clearing firms and trading firms to a brand new clearinghouse and exchange. When I met our founder, Josh Crum, 5+ years ago, we agreed right away recruiting of clearing firms would be one of, if not our greatest challenge. And well, we met the challenge, and we've already announced that StoneX and KGI have joined as clearing members. We've also engaged with an impressive array of clearing firms coming to carry brokers and/or in the process of becoming clearing members themselves. And that includes Marex, Mizuho, and Straits. So some others to be named later basically are engaged, put us in a position where we've engaged most of the non-bank clearing capacity that's out there, which and bank clearing capacity as well. So, and that's really for a brand new clearinghouse is unprecedented in modern times. We're working hard to grow that list, but we're quite confident we've reached critical mass to launch the enterprise. So here we go. On this slide, we highlight market services because we know a thing or two about integrating OTC markets with listed derivatives. Some of us had the experience, Joe and I in particular, introducing the Clearport platform back at NYMEX, which is really the first of its kind, bringing all kinds of ancillary products through the OTC workflow and making that an important part. And here at Abaxx, we don't distinguish, or prioritize one over the other. Whatever serves the needs of the liquidity needs of the marketplace and participants is what we're seeking to offer, and we'll offer that from day one. We position ourselves to provide support for real focus on commercial transactions that require enhanced tracking. We believe there's an opportunity to extend the benefits of EFP trading to support growing needs for things like traceability and tracking trade attributes that are required for evolving sustainable and ethical sourcing requirements. So we're starting with an infrastructure that's cloud native and open and modular architecture, as opposed to transitioning to it, which we think is an advantage to the incumbents and position us to introduce more product and to scale the product that we have without having to ration open access to our markets. Turning to the bottom part of that slide, our launch products, we're focused on emerging markets, and our approach to it reflects a real straightforward design where we do as much as we can to align commercial spot market practices with the futures contracts that parties, if when held to maturity, will enhance the convergence process of pricing and make sure that these futures contracts provide a high degree of hedge efficiency. All of our contracts are monthly contracts and intended to serve the industry as benchmarks, providing price discovery as far out the curve as the market is ready to go. I'll give you some information on our initial listing, but note that we have the flexibility to add contracts as needed and upon demand. And with respect to this product slate, we can confirm here that we will be listing our LNG and carbon slate on June 28th. And we're working on some final launch checklist items on our nickel sulfate suite and we'll confirm the product launch date and more details on that in the coming days and weeks. Now we can share a little bit of the details of our product suite, starting with LNG. The LNG suite of products allows parties to discover price and transfer risk at what are surely the three key regions in the LNG market. The contract structure is familiar for any natural gas trader, 10,000 MMBTUs. We list out as far as the market needs to start. The first listed delivery month will be October 2024. We'll put the current and the following and next year out, so we're out 24 months. But again, we have the ability to add contracts as required. The last trading day is the first business day in the beginning of the month preceding delivery month. That aligns with scheduling practices in the LNG industry for deliveries in the coming month. Parties holding positions to delivery will be matched so that they can carry out cargo deliveries as they would. The delivery structure is that they're going to deliver a cargo size for the Gulf of Mexico and Northwest Europe. That's effectively 3.5 BCF. In North Pacific Asia, that's 3.4 BCF, which are the conventions in the respective regions. Gulf of Mexico contract is designed as an FOB. Northwest Europe and NPA are both delivered at place contracts. That's reflecting the respective structures with the U.S. Gulf Coast being an import and export center, and both Europe and Asia being more on the demand side. And as with all our contracts at the start, we'll begin the global trading day during Singapore business hours. So when we start, it'll be the market. The pre-open is 9:30 a.m. in Singapore on Friday, 10 p.m. to start, and that would of course be I'm sorry, the AM. It's AM in Singapore on the 28th and PM in the New York time zone on the 27th. I think we could move on now to the nickel sulfate. As we did with our LNG contracts, we developed a suite of products for nickel sulfate to support regional and interregional price discovery and risk transfer. This is especially important in the emerging battery metals markets as nations seek to redefine and develop more secure sources for critical minerals. The three products, again, we seek not to pick a winner with regards to what may be a benchmark. We think all three will offer opportunities as benchmarks in the region and also offer arbitrage and spreading opportunities, which should enhance liquidity. The contracts are all designed as delivered at place contracts, serving the battery manufacturers in each of the region. Nickel sulfate is an elegant delivery process. It relies effectively on container shipping delivery, and parties holding contracts to maturity will be matched up for delivery. The contract unit size is 5 metric tons of nickel contained. And that's an important element with regards to pricing. That's how the contracts will price as well. We think doing it that way creates the opportunity for parties who are seeking other instruments for use in hedging Class 1 nickel, as well as arbitrage opportunities that may emerge between Abaxx markets and others. The delivery date of our monthly contracts is aligned with industry practice, being the third Wednesday of the delivery month, with some counting for holidays. And the initial listing will start with 12 contract months, beginning with October 2024. And we'll be providing more information on launch dates for these contracts in due course. I'd like to also, it was mentioned, our resident expert Sasha Lifshitz is on with us today. And Sasha, please share some thoughts on the contracts that you were instrumental in designing, and some more thoughts on where we're going with battery metals.
Yeah, thanks a lot, Dan. Just adding a few points specifically on the contract and in general what we're doing on the battery suite of products. Really one important factor is this DAP delivery, where we're matching buyers and sellers, and then depending on the region, Baltimore, Rotterdam, maybe specifically more than Singapore, you obviously also have the variability of bringing in material and taking out material, not only by ship, but also truck or in a warehouse. So that really provides for all the various ways of taking delivery and bringing in delivery. That's maybe one additional point to stress. And then overarching a little bit the battery suite of products, this obviously nickel sulfate is our launch product as we put it out here. But we already started working on a lithium carbonate contract, and we'll have a look at additional products which fit into the battery material space. For that purpose, we're going to be in the market very soon, and for feedback rounds on what participants like you think about lithium carbonate and the design we're going to put out to get some draft feedback. And then obviously would be interested if you reach out to us, if you see any interest, if you have any feedback, if you have any input to give in preparation of launching a new lithium contract. Always very happy to get feedback. That's how we build our markets. That's how we build our products. So let us know. Contact me, anybody of our team. Would be very nice to hear from you. Back to you, Dan.
Thanks, Sasha. All right, I think we're going to move on and discuss our carbon contracts now. We'll have 2 contracts available next week on the 28th. The first is summarized here. It's our jurisdictional red carbon futures. If you've heard from us before in our contract design, we had initially focused on a red plus contract to address voluntary carbon market needs. The events of the last couple of years have highlighted the need for more precision in terms of identifying quality and setting a bar and a standard. And so in this pass, we identified requirements that presented here with JRED. And JRED is effectively a more enhanced version of Red Plus, which is going to align with forestry products. The additional feature being that the product's enhanced through effectively government endorsements of the program, and which does improve the credibility and the requirements around the deliverable supply for the contracts. Our contracts units, if you're hearing for this for the first time, are more granular than in other emission listed derivative products on the market today. We will have the contract size is 100 tons of CO2 equivalents. The units will be priced in dollars and cents per tons equivalent. They'll be available for trading across our trading day, Mondays through Fridays. And we're going to list 13 consecutive months. We know liquidity in these markets is focused on December contracts, but we want to give the opportunity for parties to carry out deliveries in the intervening months, but also provide the valuable DSD spread from the start, which we gathered that from industry feedback. The JRED contract is going to be complemented by one more thing to point out is that the deliverable, the registries that we look to, so parties holding contracts to maturity, will carry out delivery at either ART or Vera to start the deliverable supply that qualifies right now is at the ART registry. Bavaria will has things in the pipeline where it too will soon be relevant in the JRED contract. And effectively, parties who intend to go to delivery will have to have accounts open at the registries, particularly on the buy side, and be prepared that they might have to receive delivery in either of the registries based on where the seller is offering. We can provide a great deal more details to this, but that hits it from a high level. A complementary product that we're offering at the same time is Corsia Phase 1. This contract aligns with, if you know emission markets, you may know well of the Corsia program, effectively the world's airline industry has aligned in a quasi compliance program in order to meet its obligations towards net zero. And to the extent that they're not supplementing traditional aviation fuels with other solutions, then the answer is to provide high quality offsets to meet their obligations. So we aligned a futures contract with the phase 1 of that program. As it stands now, the effective difference and an important distinction in this contract is that units deliverable within would be labeled in the relevant registries as having being correspondingly adjusted. And there's some value to that, which the market needs a better, effective, and more effective price mechanism to really highlight what that value is. It's going to be helpful to nations in setting out their programs under the Paris Accords, and it's an overdue. These tools, we believe, in tandem because of the spread values that come that'll emerge from them and trading in these markets will help set benchmarks for those important numbers as parties are progressing their plans, both project developers and nations who have to meet their obligations. The contracts are effectively identical in their design. From it's 100 tons of carbon equivalent in each of them, and the price the same. We'll list contracts out from December 2024 for 13 months to include the DC spread. And in this case of the Corsia contract, the eligible registries are in the American Carbon Registry. Right now, the deliverable supply is listed at ART, but again, under both those registries, there's quite a bit of supply in the pipeline that's going to come due and be available for delivery under our contracts. And I think our colleague Alistair Weir, who's instrumental in helping us to design these contracts, is online, and I think he'll be available to help answer any questions that may come up in the Q&A session. That's it from the products. Over to you, Joe.
Yep. Thanks, Dan. And thanks, Sasha, for the details on the products. I do want to reiterate again to everyone that you can submit your questions to be answered at the end of the presentation using the Q&A button on the bottom of the Zoom page. So just a couple of things to get into before Xiaomei takes over and goes into the accessing the markets part of the presentation. I think it's important to note that doing the hard work to build the first commodity-specific futures clearinghouse to launch in decades is hard work. We can attest to that. But it also allows us to bring these important new benchmarks that Dan went through to the markets and to your customers and the customers, the trading firms that are on here. It also allows us to partner with the broker, clearing, and trading firms to bring additional new products to the marketplace. We continue to encourage everyone on the call to continue to bring new product ideas to us that aren't being addressed by the current incumbent exchanges and clearinghouse. We feel that there's an opportunity to continue to build our marketplace utilizing our clearinghouse to do that. Accessing our markets isn't different or is not much different than accessing other regulated futures markets. And with that, I'll pass this to my colleague, Xiaomei, who will speak to the specifics of onboarding customers to the exchange and the clearinghouse. Xiaomei, over to you.
Thanks very much, Joe. So I'll take you through the processes that need to be completed in order to access Abaxx markets. First, we'll go through the steps as a trading participant. So first and foremost, you need to establish clearing connectivity. If you are a client of one of our approved clearing members, which is StoneX or KGI, you have this part covered. If you currently clear through a different clearing firm, please express your interest to participate in Abaxx markets to your clearing firm, and have them speak to us. And there are two ways that they could provide connectivity. The first way, which is they could apply to become direct members of Abaxx, and the second way would be to provide access through a carry broker. So on the next part of this onboarding process is establishing system connectivity. So if you intend to execute block trades, you would need to complete two critical onboarding tasks. The first would be to execute the Abaxx corporate user agreement, and also to complete the Abaxx trade registration platform setup. So the Abaxx trade registration platform is basically our in-house system built to facilitate block trades. And once we have those two steps completed, you'll be pretty much good to go, but that's still not the final step yet. Also, please ensure that the voice brokers you intend to execute trades with have already been registered with Abaxx so that they can have system access to block those trades on your behalf. We will be publishing a list of interdealer brokers that are registered with Abaxx on our website shortly. Next, if you intend to trade on our central limit order book, Abaxx provides front-end connectivity through CQG and TT. So if you want access, please request for access to Abaxx through your clearing firm. And lastly, the final step is once you have these first two steps covered, your clearing firm will need to set up accounts under your firm and also set limits for the relevant accounts accordingly. So next, I'll take you through the steps to access our markets as a broker. The steps are pretty simple and it's similar to a trading participant. So for onboarding, you will need to first execute the Abaxx corporate user agreement. And then secondly, also complete the Abaxx trade registration platform setup. And then once those two are completed, very importantly, you have to request your clients to permission you on the ATRP system to provide you authorization to block trades on their behalf. So that's pretty much it for the onboarding steps to accessing Abaxx markets. I'll hand it back to Dave for our Q&A session.
Thanks so much, Shanmei. And as Shanmei said, now we'd like to answer any of your questions. We have had some questions coming in. As a reminder, you can submit your questions using the Q&A feature on the controls toolbar on your screen. So let's dive in. I think the first question would be good for Joe or Shanmei, and that's, what if my clearing broker isn't available at your launch? How do I access your markets?
Do you want me to take that, Shanmei?
Yeah, sure. Either way, you can take
Yep.
it.
So yeah, I think Shanmei did mention it. If your clearing broker is not part of the original, the direct clearing firms that we have, you can tell your clearing firm to that you're interested. Certainly, that helps push them to get moving faster with us. That's representative in the clearing firms that we already have on board. But there's also a process called a carry broker, where the clearing firm that you may be utilizing can connect with one of our direct clearing firms, StoneX, KGI Securities in Singapore, to clear your trades through your original clearing firm into the carry broker, and they would show up on your statement just like any futures contract, whether it's electronically traded or on block trades. Again, if there's any questions on that, you can reach out to me or any of us on the team with our direct emails, or use the user onboarding at Abaxx.exchange there, and we can help guide you through the contacts at both the direct clearing firms and some of the carry brokers that we're using.
Thanks, Joe. Another question that's come in that would be good for Alistair or perhaps Dan would be regarding the carbon products. How do they compare to the ICE Corsia Phase 1 contract? Are there differences in terms of clearing scope, counterparty risks, etc.? Also, are there plans to include credits or standards that can be eligible to other compliance markets like the Singapore carbon tax regime?
Thanks, Dave. So I think at a high level, the biggest differentiator between ourselves and some of the incumbent contracts is the inclusion of art trees as an eligible standard in our CP1 contract, recognizing that at the moment, the only deliverable supply for CP1 is coming out of art. So that allows us to go to physical delivery at the end of first contract month. In terms of looking at eligibility for other regional compliance markets, we're obviously tracking the development of Singapore's compliance market and a number of other compliance markets. And as they continue to evolve, we'll track the relevance and need for additional contracts that meet the needs of those markets, but haven't yet committed at this time to participate or develop and launch other contracts.
Thanks, Alistair. We have a question that I think would be good for Sean May, which is, will you have market makers?
Yeah, we will have market makers. We have market makers who are committed to participate in all of our products currently. And we're still accepting applications for additional market makers. So if you're interested, please feel free to reach out to us. We think we have quite an attractive program that has gotten quite a positive feedback from the participants so far.
Right. Thanks for sending in questions. You can continue to do so using the Q&A button on your screen. Another question we've received is, this would probably be best for either Sean May or Dan, which is the corporate agreement same as exchange membership, or is it a different process? Could you provide a guide for such a process and technical requirement, in other words, for ATRP?
Yeah, I can answer. Or Dan, do you want to take it?
Yeah, simple point is the agreement that we seek for market participants is really about terms of access and intellectual property. So it's, you're really qualifying. You're already qualified as a customer of a clearing member from a KYC perspective. We're just enabling you in our systems and protecting our property rights. So it's not nearly as involved as becoming an exchange member. And in fact, exchange member in our model isn't so critical. Our clearing members are the most likely only ones to be exchange members. The clearing members are the ones who are going to grant access to their customers, which is most appropriate from a risk management perspective. So becoming a clearing member is an involved process, as you would expect. We think we do it quite well in a streamlined way. So if you are coming from the perspective of a clearing member, they're two different processes. So consider the corporate agreement as just a way for trading firms and brokers to be enabling our systems to submit transactions, as opposed to a clearing member application, which is to be granted authority to become a clearing member like StoneX and KGI.
Thanks, Dan. And might stick with you for the next question, which is, are margin scan ranges already available?
For the products that'll be available at launch, we will be issuing notices by the end of the week. That'll be available on our website with that information.
All right, terrific. We also have a question regarding the nickel sulfate contracts, which is, do you have a go live date? Also, what volumes are you anticipating on launch, plus Q3, Q4, and into 2025?
We have we have not issued our launch date yet, but it's we're expecting that's going to be in the coming days, if not weeks, following the 28th. And we're just, like I said, we're going through final launch checklists. We want to make sure we have all the key parties aligned and prepared. So from a volume perspective, we have projections that kind of align with historical. But again, the numbers really don't play out until you get there and you launch the product. So we're not prepared here to give real detail, but I think Sasha might be able to give a little bit more color to the market than me, given his experience in the nickel market.
Yeah, look, thanks. I wouldn't want to go out and put numbers. I mean, I think that it's not realistic at this point in time to really talk about actual trade volumes. I think the one thing I would like to reiterate, and I think that's also important for the broader audience here who's anticipating trading this contract, the way we've structured our contract, it's the physically underlying product is nickel sulfate. But the way we've structured it, the contract is it's 5 lots of nickel units, so nickel content, which means that we are anticipating that our contract will also be used for any kind of nickel unit that wants to be hedged, that wants to be benchmarked against long-term contracts. Pretty much in line with what the LME is doing these days, where you price nickel or where you price intermediate products against a LME benchmark. So we have specifically designed our contract the same way that you can really use it as a proxy for any type of nickel unit. And as a consequence of that, we anticipate that the volume will obviously and the liquidity will increase on the back of that. Just not looking specifically only at the underlying physical nickel sulfate product, but really using that tool for any kind of pricing activity which is happening on a normal futures exchange for, in this case, for nickel.
Thanks, Sasha. We have another question about day one volumes. Maybe I'll send this one over to Joe. And that question is, the launch opening seems to be rushed with little lead time between announcement and go live being very short. Given that the list of execution brokers isn't yet published, what level of activity are you expecting on day one, or do you expect a gradual build?
It's a good question. I think, when you're building a new clearinghouse, again, going back to what I said earlier, that hasn't been done in decades, it is a difficult, if not monumental task to get clearing firms that will commit, like StoneX and KGI and others that will commit to be a partner with us on this is not an easy task. And I wouldn't recommend it to anybody, actually. It's very difficult. But to that point, we're very confident that we've given the marketplace a lot of time to understand, specifically, we had some times when we were not exactly sure when the launch was going to happen. We had some finalization to be done on the regulatory side, but we're there. And we've given the marketplace 2 weeks. We have brokers that are registered with us. I would say most, if not all, of the major broker firms that are involved in all of the asset classes that we have, LNG, carbon, and nickel sulfate, are on board with us. The brokers that are at the clearing firms that are on board with us are also able to execute. So yeah, I think we know we have the brokers on board. We will be publishing them on our website. And from an activity level, I think I'll reiterate what Dan said. I think that we will see activity across both electronically and on block trades across our markets. I think we will see a gradual build as Alistair mentions. It's a quiet time, relatively quiet time of the year. I don't know if there's ever, in all the launches I've done during my years, and sure Dan has too at our time at the NYMEX, there's never a perfect time to do it. We know the summertime is more quiet, but we also know that it will give a chance for the marketplace to come in, make sure that everything works correctly, margins flow, positions show up in your accounts, which we fully expect will be the case given the amount of time. We've had 5 years to build this. So I think we're ready. We'll assist the marketplace and any of the trading firms that need help in finding counterparties and finding brokers that they want. So you can reach out to me directly or use the email that's there on the screen for any additional questions.
Thanks, Joe. And we're coming up on 45 minutes in a few minutes, but we do have time for another question or two. So if you want to get yours in, once again, you can use the Q&A button on the toolbar of your screen. One question we've had is probably best directed to Dan, and then you can direct it from there, which is what other products are in your pipeline?
So the great thing and an important thing about Abaxx is that we're committed to commodity markets, right? We think there's a great deal of opportunity to offer in emerging markets as well as existing markets more and better design. So we're not limited from a product scope in any way. Sasha has already indicated our interest in expanding the battery metals complex. We have a fairly well-developed initiative underway that's focused on the precious metals markets that will provide more details on a great deal of detail and target certainly by the end of the year. And we will seek to expand our energy in the energy space. LNG is going to offer us basis opportunities and arbitrage opportunities, not just gas on gas, but gas to power or gas against alternative fuels and alternative benchmarks. And there'll be a combinations of physically settled, but a lot of the basis, what I refer to as gas to gas, will seek to leverage our contracts as physical benchmarks against some more thinly traded markets that have financial indices out there that may be more thinly traded, but are interested in important commercial spread relationships. We'll do that across the energy complex. And we've got some preliminary looks into agricultural markets. There really are no limits in what we're looking to, but the things I mentioned in more detail are our priorities. And we are built to scale. That's an important thing. Joe and I introduced the concept of, when we started Clearport, NYMEX had less than 10 actual futures contracts on its rolls across the NYMEX and the COMEX board. When we started, in short term, we were in the hundreds and it extended into the thousands. So we understand about scaling product, and that's the way our systems are built. So stay tuned.
Okay. Well, I think that uses up our 45 minutes for the day. Thank you for your questions. Thanks for spending time with us. We know your time's valuable. We really appreciate you all joining us today, and we look forward to working with you to commence trading in these new markets on June 28th. If you have further questions or would like more information on connecting with Abaxx Exchange, please feel free to reach out to any of us personally or email us at the address on the screen, user onboarding, all one word, no space, user onboarding @abaxx.exchange. Thank you,